Next, for the business news with France 24's Kate Moody. Good evening, Kate.
Hi, Delano.
Another volatile day for global stock markets as the risks related to the coronavirus, continue to expand.
Yeah, absolutely. Monday was the worst session for global stocks in over 2 years. And after a slow start to the day, the losses have really continued to add up this Tuesday. On Wall Street, the Dow Jones has continued its downward spiral. It lost 1,000 points on Monday, and it's down a further 750 points this hour. The yield on 10-year U.S. Treasury bonds trading at a record low near 1.3% as more and more investors turn to so-called safe haven assets. Just over an hour in the trading session to go on Wall Street. The major European indices declined as well. We saw stocks in Milan weighed down as Italy emerges as the epicenter of European cases. The FTSE 100, DAX and CAC 40 each losing nearly 2 percentage points. Analysts saying that companies and investors are beginning to take stock of the medium to long-term impact of the outbreak.
Investors are reacting to the likelihood that economic activity around the world is going to be dampened by the coronavirus outbreak. So it is true that markets are typically guided by greed and fear. I think that there is some fear creeping into the markets now, but I don't know that that's necessarily irrational.
Well, governments are facing calls to protect their public and their economies. Already, China's government and central bank have been taking steps to try to limit the impact on the economy there. But policymakers around the world are considering their options as well. The traditional tools of interest rate cuts or bond buying may not help because they actually stimulate demand and not supply, which is where the big problem is for countries outside of China at the moment. Governments may have to step in to help businesses avoid bankruptcy during these difficult periods. Measures like tax breaks could help those who can't get supplies from China, but it's a temporary fix and comes, of course, at a cost to the taxpayer. Well, those warnings have shone a spotlight on just how much companies now depend on international supply chains. The French Finance Minister Bruno Le Maire said the outbreak could be a game changer in the way the now globalized economy does business.
The outbreak underlines the imperative need to relocate a certain number of activities and to be more independent in a certain number of production chains. The best example of this is the health sector and medicines. We can no longer continue to rely 80 to 86% on active principles for medicines that are produced in China. That would be irresponsible and unreasonable.
Health officials around the world have underscored the importance of hygiene to prevent the virus from spreading further. Chinese banks have been ordered to disinfect their banknotes before redistributing them to the public. State TV said that cash from high-risk areas like hospitals and markets would be sealed and not put back into circulation. Some $86 billion worth of new banknotes have been distributed in China over the last month. Well, few sectors have remained untouched by the outbreak. Here in France, wine producers say they're already seeing a drop in exports to a key market. Claire Rush reports.
This 64-hectare winery in the south of France produces 400,000 bottles of wine per year, 10% of which are exported to China. But this year, not a single bottle has been shipped there. The coronavirus exacting its toll.
This is our 2019 rosé. It was supposed to be exported, but now they won't be heading to China. All orders have been cancelled. We don't think we'll be able to export anything there for 2 to 3 months, especially as we can't get in touch with our importer there.
The whole industry has taken a hit. China is the 4th largest market for French wine. 10% of France's total wine production is exported there, accounting for 604 million euros in 2018. This winemaker estimates his losses have already reached 800,000 euros.
In terms of sales, it's very concerning. We're now obligated to redefine our commercial strategy, which is a major problem. And there will also be repercussions regarding jobs.
The future of his 15 employees remains unclear. On top of the coronavirus, France's wine sector had already been struggling with the fallout from Brexit and U.S. tariffs, casting economic doubts over this year's vintage.
Well, moving on to some of the day's other business news now. EU ministers have formally agreed on a mandate for their negotiating team as trade talks with the UK are due to kick off next week. The guidelines indicate the EU will insist that British rules and standards remain similar to Europe's post-Brexit in order to maintain access to the European single market. The British government has immediately rejected that idea. Its own team is meeting to establish its mandate, which will be published then on Thursday. The EU's top negotiator, Michel Barnier, has warned he will not conclude an agreement at any cost, saying the talks are likely to be difficult.
We are ready to offer a highly ambitious trade deal to the UK. But the UK cannot expect high-quality access to the single market if it is not prepared to accept guarantees that competition remains open and fair. Free and fair, open and fair. The two words are equally important.
Donald Trump's visit to India was seen as a chance to improve the country's economies after trade tensions flared in recent years. There was no big news of a trade agreement, although some deals did get announced on the trip. Ellen Gainsford has the latest.
Aiming to fix a festering trade dispute, Donald Trump and Narendra Modi have been holding one-on-one talks, hoping to deepen commercial ties between their two nations and balance the weight of China in the region.
We have made tremendous advances for our people over the past 2 days, and working together, I know that our two nations will continue to achieve new breakthroughs, unlock new potential, and forge even brighter futures in the years ahead.
One key sticking point has been an ongoing tariff dispute, but the US president said the two sides are making progress on a trade deal, suggesting it's likely they'll reach one by the end of the year. Negotiators from both countries have been working to find a middle ground on agricultural goods, medical devices, and digital trade. Narendra Modi, for his part, stressed that trade was already becoming more equal between the two powers.
India and the United States are committed to openness and fair and balanced trade. In the last 4 to 5 years, our economic ties have reached $70 billion in 4 sectors: energy, civil aircraft, defense and higher education, thanks to President Trump's policies and decisions.
The two nations are also looking to deepen defense ties. India is modernizing its military, pledging to buy $3 billion worth of equipment, including 24 Seahawk attack helicopters from US suppliers.
The US-based travel group Expedia is making major job cuts. Some 3,000 jobs are to go in the company's offices around the world after what it called a disappointing performance in 2019. An email to staff said the decision was made after the company had grown in what was called an unhealthy and undisciplined way. The chairman telling the Seattle Times newspaper that the move would simplify the business, which he says is bloated. He's aiming to save up to $500 million this year. The group includes travel sites like Orbitz and Hotels.com, Delano, and it comes, of course, as the industry is really rapidly changing. These job cuts alone accounting for 12% of the company's workforce.
Thank you very much for that, Kate. Kate Moody there with a look at today's business news. We're going